McGuire, Managing Director at CWA Global Markets in Sydney. Pete, we were talking about runaway gains for commodities. Just look at copper, among the biggest winners in 2009, now at a 16-month high. Isn't it time for some kind of correction? Isn't there rising inventories?
Well, copper's a very interesting one. It's a wonderful barometer, Haslinda. We use copper and crude oil as a barometer for the commodity complex. Copper's been outstanding. It's had a great rally over the last, 10 to 12 months. I think 7,000 will pull it up, maybe hit 7,500, and I think it'll be a couple of years until it takes its highs out that it experienced in 07, 08. Nickel is well off its highs, aluminium, lead, zinc, tin, but I think that whole complex will do very well over the next decade, but I think it'll be just a couple of years out till it takes its highs out again.
And what's the biggest risk? Right now, there's so much optimism that perhaps the U.S. economy has seen the worst and that, China will grow exponentially. What if those things don't happen?
Well, I haven't... What if they don't happen? I don't know where we're going to get growth in the United States. It's going to be a number of years until that really gets some traction. I'm not calling, a double dip here, but it's hard to put a letter as far as the US economy. I think it's going to be long, protracted, slow growth. Haslinda, a very sad bit of info I saw the other day. 1 in 50 Americans are actually only surviving on food stamps. Now, that is really a terrible indictment on that whole economy. We call that the largest economy in the world. That's number one. Well, I'd hate to be number 240. So I see the United States really in a bit of a pickle at the moment, and I don't see any sunshine out there. As far as China's concerned, yeah, look, it needs to grow at 8%. You've got 20 million people entering the workforce each year, so it needs 8 plus. Let's just see what they do in 2010 and 11, Haslinda.
Oil back above $81 a barrel. How convincing is the rise in crude?
Been a very strong rally over the last, 8 or 9 trading sessions. What I think has happened, gold was sold off. Those US unemployment numbers came out on the 4th of December. Gold really took a tumble down from 1220 down to the best part of about 1,070, 1,075. And they all drove it sideways to down. Then the smart money jumped on crude oil in the last week and a half to 2 weeks. It's been a great trade. I think it'll probably run out of steam at around about $82, $83, $84. I don't expect it to go much higher, Haslinda, unless you saw something happen as far as supply issues or geopolitical. But it's been very, very strong. There's no doubt about that. Later in the year, probably 85 might take 90 out, but I think that'll pull it up.
Okay, just before I let you go, one final question. You said that soft commodities will remain at the current trading range for the next quarter. Why is that?
Well, I don't see a lot going on for corn, the grains, soy and wheat. We'll wait till the next harvest starts. But where the standouts are, Haslinda, is going to be the sugar market and certainly probably the OJ market. I see sugar going up. When you look at inventory levels, you're looking at sort of 74, 1980 and 2005, these particular ratios. And I think that the sugar market's got the potential to take 32 cents out on the upside. And I think OJ will trend higher as well. But as far as the grains are concerned, I don't see much sunshine on those particular ones, Haslinda.
Okay, Peter McGuire, CWA Global Markets has been spot on for a lot of his